Good morning, hunters. Welcome back to the Daily Hunt for Multibaggers on this Friday, January 30th, 2026.
That's right. We've dug deep into the data collected yesterday, January 29th, and let me tell you, it was quite a lively day in the markets.
Absolutely, Brooke. Our algorithms flagged a significant number of discussions across several different stocks. We saw some truly massive surges in social media buzz around companies like Microsoft and Sandisk, with hundreds of posts, indicating a strong positive sentiment there.
But it wasn't all sunshine and rainbows, you know? While there's a definite current of optimism for certain tech players driven by AI, we also observed some pretty deep skepticism and bearish sentiment for others, particularly around valuation concerns and perceived corporate strategies. So overall, a very mixed bag today, leaning towards promising, but with very distinct pockets of risk.
All right, let's jump right into our first pick for today, Palantir, ticker PLTR. Now, the vibe check on PLTR is leaning bullish, with many users really enthusiastic about its long-term potential, especially in the government and AI sectors. People are making significant bets, like one user putting in $30,000 expecting a boom from upcoming earnings. They really see it as the premier AI for the military and a key player in enterprise data insights. That strong revenue growth, it's really impressive, at 62.8%.
Well, Ethan, while that user optimism is certainly palpable, my KPIs are flashing some pretty bright red lights here. The price-to-earnings ratio for PLTR is a staggering 353.16, and the price-to-book is an equally eye-watering 54.92. Users themselves acknowledge these ridiculous metrics. That kind of valuation suggests immense future growth is already baked in, leaving very little margin for error, even with that strong revenue growth. The news also points to recent struggles for the stock, despite those long-term partnerships. Historically, we've rated Palantir as stay away quite a number of times. I hear you, Brooke. The valuation is stretched. And that high debt-to-equity ratio of 3.52 can't be ignored either.
Given the current data, I think it's prudent to classify Palantir, PLTR, as stay away. Moving on, let's talk about Tesla, ticker TSLA. There's some buzz around a potential SpaceX merger, which some might view as an exciting diversification. Insiders have actually been net purchasers of a significant number of shares, which could be seen as a vote of confidence. Elon Musk is really trying to pivot the company aggressively into AI and robotaxis, which, if successful, could be absolutely transformative for future growth.
Transformative or desperately distracting, Ethan? The prevailing sentiment is extremely bearish. Users are widely accusing Elon of spreading rumors to pump Tesla and protect his bonus. Many are questioning the health of Tesla's core EV business, citing dropping revenue and sales. The PE ratio is an astronomical 385.70, which is just not sustainable with a revenue growth rate of only 11.6%. And that net profit margin is a modest 5.3%, which doesn't support this kind of premium. We also saw Q4 earnings fall by 17%, and there's a strong call from users for a new CEO. Tesla has consistently been a stay-away or speculative gamble for us in recent times.
Yeah, it's hard to ignore that level of skepticism coupled with the fundamental valuation concerns.
Indeed, the high debt-to-equity ratio of 17.082 also adds to the financial risk.
For Tesla, TSLA, we're sticking with a stay away. Next up, we have Microsoft, ticker MSFT. This one's generating a lot of excitement. Users are reporting significant gains from recent earnings plays, with many calling it a buying opportunity despite any short-term dips. It seems to be bouncing back strong. We're seeing incredibly robust fundamentals here, with revenue growth at 18.4% and an impressive net profit margin of 35.7%. Q2 earnings beat estimates, largely driven by cloud and AI, and analysts are very bullish, predicting a positive 2026. Plus, we've seen substantial insider buying, with over 432,000 net shares purchased in the last 6 months. That's a huge vote of confidence.
You're right, Ethan. The KPIs here are fundamentally strong. While the PE ratio of 27.09 is certainly not cheap, it's justifiable given Microsoft's consistent growth and profitability. The talk about heavy spending on AI is actually an investment for future growth, and the current price is significantly below its 52-week high, which really does make it an attractive entry point for a quality company. Our previous rating for MSFT was stay away just yesterday, but before that, it was often buy or cautious buy. Given this new data, it looks like a clear upgrade.
All signs point to a positive outlook here.
Agreed. The insider buying and strong earnings beat signal continued upward momentum.
So our verdict for Microsoft MSFT today is a definite buy. Finally, let's talk about Sandisk, ticker SNDK. This one is roaring. Users are celebrating a historical beat after their Q2 2026 earnings, causing the stock to surge by 12% after hours. There's a real sense of FOMO kicking in. The news confirms Sandisk profit revenue jump on AI demand, which is a huge tailwind. Revenue growth is a healthy 22.6%, and they've extended a key joint venture until 2034, signaling long-term stability. The stock has seen massive historical gains, from $27 to over $500 in a year, which users are highlighting as proof of their long-term potential.
It's true that the recent earnings news is overwhelmingly positive, Ethan. That surge on AI demand is significant, and the insider buying, nearly 2.5% of total insider shares, certainly adds conviction. However, it's worth noting that historically, their net profit margin and EPS have been negative. While the news suggests a profit jump, we need to keep an eye on if that trend sustains. Also, the debt-to-equity ratio is high at 16.661. This stock was rated stay away recently, then cautious buy, and now the earnings news has really turned the tide.
But the immediate impact from the earnings and the clear AI demand really can't be understated in driving future profitability. It looks like a strong turnaround.
You've got a point there. The market is clearly anticipating improved future KPIs, which makes the current price, while near its 52-week high, feel justified by the new developments.
So for Sandisk, SNDK, we're upgrading it to a buy.
All right, hunters, let's round up our top candidates for today's deeper analysis based on our discussions. Investigate as buy, Microsoft, MSFT, Sandisk, SNDK. Investigate as cautious buy, none. Investigate as speculative gamble, Tesla, TSLA.
And that's all the time we have for today's Daily Hunt.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
Thanks for tuning in, everyone. We'll catch you next time on the Daily Hunt for Multibaggers.